Hello everyone, I am Malashree, Master Trainer of EduBridge. Thank you for joining my video session. You have a special surprise waiting for you at the end of my video. Please do like my video and also subscribe to our channel to get more such amazing videos from our expert trainers. Today, my topic is Basics of Accounts. Accounting is a process of identifying, recording, summarizing, and reporting economic information to decision makers in the form of financial statements. Each and everyday transactions need to be recorded in the chronological order. This type of recording is called as journal. After the journal entries are prepared, we need to post each and every item of journal entries under the appropriate heads. So it is called as ledger. After the ledger, we need to prepare three reports: trial balance, trading and profit and loss, and balance sheet. Trial balance, it is used to find the arithmetical accuracy of the books of accounts by taking all the closing balances of ledger accounts. Trading account, it is used to find out the gross profit or the gross loss of the business by taking all the direct expenses and the direct incomes of the business. Profit and loss account, it is used to find out the net profit or the net loss of the business by taking all the indirect expenses and the indirect incomes of the business. At last, it is balance sheet. It is used to find out the financial position of the business by taking all the assets and liabilities of the business. So, all these three will form the financial statements. These financial statements are useful for the various parties. The first one is suppliers. Suppliers will be giving supplies to all the business people, and they need to get paid for the supplies which they have made. So, for that, by seeing these financial statements, they can make out whether they'll be getting their money back or not. Next, it is employees. Employees who are working in the organization needs to know the financial statements so that they can think about the future of the business, and they will be thinking about their salaries and bonuses. And also, if the company is not doing good, then they will think of changing their jobs. Banks and lenders need to know the financial statements because they will be providing the loans to the business, and they can assume the risk by seeing the financial statements. Owners are the first parties who wants to know the financial statements so that they can see how much their money has been increased or decreased, and whether they are gaining the profits or loss. Government needs to know the financial statements because they need to do the tax calculations. So these are the various parties where they need to know the financial statements, and it is useful for them. Commonly used accounting terms, the first one is transactions. So each and everyday transactions need to be recorded. So that is all money transactions will be recorded. So here it changes the organization's financial position. So everyday transactions will change the financial position of the organization. So for example, when the sales are made, the cash is increasing and the goods are decreasing. Similar way, when the purchases are made, goods are increasing and cash is decreasing. So it is an event which is changing the organization's financial status. So this transactions can be cash transactions and also can be credit transactions. Next, it is capital. Capital are the money which is invested by the owner. This capital can be in the form of cash, and also it can be in the form of assets. Next, it is assets. Anything possessed or owned by an individual or a company which are not for usual selling or trading purpose and utilized over a period of time are called assets. So these are the things which are utilized in the business and that remains in the organizations for a longer period. For example, computer, equipment, machinery, furniture, etc. Liability is the amount due for the goods, services, or anything taken from the party or anyone is called as liability of the business. So, organization would have taken the loans from the banks. It is the obligation of the organization to pay back that loan. So this is called as liability. Drawings, the money withdraw or taken something of money worth from the business for the personal use, it is called as drawings. Owner will take the money from the business account to his personal expenses, so it is called as drawings. Bad debts, the amount which is unrecoverable from the debtor due to the reasons like insolvency or absconding, and company will not be able to realize due amount from the debtor, hence the unrealized amount is called bad debts. So company X is selling the goods to the customers of rupees worth 1 lakh, out of which the customer is not paying the amount of rupees 10,000. He is defaulting of rupees 10,000. This 10,000 amount which is unrecoverable, it is called as bad debts. Purchases. Purchase is the amount of goods bought by a business for further use or for reselling the goods purchased with immediate payment of the cash or called cash purchases. Goods purchased on credit are called credit purchases. So I'll buy the raw materials and I'll put it into my business and I'll make this as a finished product. Or I'll purchase a finished products directly and I will use that finished products for the purpose of reselling. So this is called as purchases. Purchase returns, the goods that have been purchased but are returned to the seller before consumption. So, due to the various reasons like poor quality and damage are called purchase returns. Out of 1 lakh rupees of the purchases made, so 50,000 is of poor quality and damage. So, that will be returned to the suppliers. Sales sales refers to the amount of goods sold by a business. Sales made against the immediate payment of cash are called cash sales. Sales on credit are called credit sales. So here selling it to the customer on the cash basis or on the credit basis. Sales returns, the goods that have been sold are returned by a buyer before consumption due to the reasons like poor quality and damage are called sales returns. Customers are returning to the suppliers if they are unhappy with the poor quality and as well as damage. Stock, unsold goods which are there in the godown or raw materials which are taken for the purpose of putting it into the manufacturing that like the with the business are collected known as stock. Revenue, the earnings of the business through its activities and operations is called revenue. I am selling the goods to the customer and customer is making the cash payment to me of rupees 1 lakh. This 1 lakh will consider this as a revenue or income. Debtor. A debtor is a person who receives benefits from the business immediately but is obligated to pay in the same in the near future. So that is customers are purchasing the goods on the credit basis. So the debtor is called as customer. So they are getting the benefits immediately, but they will be paying it to the suppliers on a later date. So this is a credit transactions. For example, a buyer who purchased the goods from the business on credit becomes a debtor to the business. Creditor, a person who provides benefit without receiving immediately payment for the same and who will claim the payment in future is called creditor. So creditor can be called as suppliers. So without expecting the immediate payment, so he is providing the benefits to the customers. So he is called as creditor. Mode of accounting. Accounting identifies only those transactions and events which involves money and is sorted on the various source documents. All money transactions are recorded on a day-to-day basis, and to record this set of transactions, there are certain source documents which will be acting as a supporting documents. The following are the commonly used source documents: cash memo, invoice or bill, vouchers, receipt, check, debit note, credit note. We'll see one by one. Voucher, it is a document in support of a business transactions containing the details of such transactions like particulars, quantity, rate, and value. Receipt, when a trader receives cash from a customer against the goods sold by him, the trader issues a document to the customer for the cash payment done. This document is referred to as receipt. So from the customer point of view, as they have made the payment to the suppliers, they'll be getting this receipt. So it contains the following details: name of the customer, details of amount received, date on which the amount is received. Invoice or bill. When a trader sells the goods to a buyer, the trader prepares a sales invoice. If in case of a credit transactions, supplier will issue a sales invoice to the customers containing the details such as name and address of buyer, name of the goods, amount and terms of payments. When a trader purchases the goods on credit, receives an invoice or a bill from supplier of such goods. Cash memo. When the goods are sold for cash, the seller issues a cash memo to the purchaser. A cash memo contains the details of quantity of goods sold, rate per unit of goods sold, and as well as the total value of the sale. Check. Check also acts as another source of document when the cash is not paid. So the customer will issue the checks to the suppliers. Checks issued by a buyer become source documents for recording the transactions in the books of accounts of both the buyer and as well as seller. Credit note. Credit note is recorded by the seller when the goods sold by him or returned to him by the buyer. Due to the defects, due to the poor quality and damage, when the customer returns the goods to the seller will raise the credit note. It contains the details of goods returned, the buyer details, and as well as the amount involved. Debit note. A debit note is recorded by the buyer when the goods purchased by them are returned to the supplier. From the customer point of view, for the goods which he is returning to the suppliers because of the poor quality, damage, and defects, the customer will raise this debit note. It's recorded by the buyer when the goods purchased by them are returned to the supplier. It contains the details of goods being returned, the seller details, and as well as the amount involved. Thank you for watching my video. It was very encouraging. As a token of my appreciation, I would like to offer you a discount of 10% on all the courses which are available in our website www.edubridgeindia.com. You can use the coupon code YouTube10 to get the discount of 10% on all the courses available in our website. Wish you happy learning.